Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this technical analysis of the stock market video, I'm going to take a look at the New York Composite and the S&P 500 on a daily and weekly basis, one of my key indicators, and three key ETFs, the semiconductors, the home builders, and the financials. So stay tuned. All right, we're going to start off here with the S&P 500 on a daily basis. You can see on Friday was down 8.1, a little bit of an inside candle in here. This sure looks like consolidation to me. I still have this as a minor wave 4 pullback, counting a sequence of 5 waves, 1, 2, 3, 4, and expecting a 5th wave. But here's the big caveat. If it breaks below this red line, below this high here, then that wave counts out. Plus, at the same time, there's a decent chance if it does that, it's going to break this trend line in here, which I think will be fairly negative. So the interesting thing is, I mean, it just looks like consolidation to me. We're not getting these spiky little bottoms like we've had a tendency to have. I mean, right here, to a certain degree here, a little V-shaped bottom. Now, you don't have to have a little V-shaped bottom like that, but that seems to be the tendency for decent bottoms. Anyway, that's the look of the S&P. Let's take a look at a weekly chart. And here's the same picture on a weekly chart. Oh, now we have a second week below the 10-day moving average, which we haven't had in a while. We haven't had that since back here in February because there was never 2 consecutive weeks closing below the 10-week. Okay, so now we got it again. Now, just because that's happened, and even if it breaks the low, a lot of times if it breaks the low, that kind of plays into one of my setups. But if it breaks the low, I think that increases the chances that we're going to get some further follow through to the downside. No guarantees. And then the question is how much and what does that mean for the wave count? But right now, we just got to take it one step at a time. Let's take a look at the New York Composite. Now, for an alternate scenario, the New York Composite hasn't gone to a new high. So I am still continuing with the bearish count on the New York Composite. And I believe we're in a counter trend move that may have actually completed itself back up here at the beginning of September. And we may have intermediate wave 2. It's how I've got it labeled. It's back down to this trend. It's trying to stabilize itself here at the trend, but it has been breaking below this little trend line, this counter trend line. And it's a little clearer when we look at it on a weekly chart. Let's look at it here. You can see what I'm talking about. So here's the high back in May of 2015. We haven't taken out that high at this point, so there's no reason to change the perspective and the count that I've got in that we are intermediate wave 1 down, intermediate wave 2 back up. And if we are really starting intermediate wave 3 down, this should really start to accelerate and become more powerful. So that's something to be aware of. And we've been seeing some pretty negative days in here. The downdraft days that we've had have been very, very negative in terms of volume and declining issues outnumbering advancing issues. Very, very negative. All right, so this is the bigger picture on the New York Composite on a weekly basis. And, I think we're doing a big, from a top here in 2007, a big A, B, and working a wave C down on a super cycle wave count. And that right now, still holding down. This is the view, this is the count that holds best on the New York Composite. All right, let's take a look at the short-term trading index. Here back on, what day was this, Tuesday? Yes, this was Tuesday, this big negative move. It was even more negative in terms of the short-term trading reading, trend reading than on Friday, which was really, really interesting. But we didn't get 2 out of 3 closes above the 2 level in here where I've got this line. And a lot of times I watch for that to see if there's a short-term bottom, indicating a bottom as a cluster of 2 out of 3. But we didn't get that. Now, this reading back over here, 0.83, really led the top by about a month. So this happened right here on this very bullish reading of the 10-day reading. Happened on July 14th, and we topped out on August 15th. Okay, so that's that picture. Let's take a look at the semiconductors. The semiconductors This, I don't believe that fourth intermediate wave is done. I just don't think that this is long enough given the type of action we've had in here. So I think we're still in a fourth wave. We'll just watch how this wave count plays out. We did get this little pullback into this previous fourth wave here, but I'm just a little wary that this has gone long enough. Mainly because we had a pretty 13-day pullback right back in here, and this has not even come close to that yet. The home builders, look how it's testing this trend line. This is the trend line from the February low. It is right on it. And so this has not, this also has not punched to new highs by any means. This was the August highs in 2015, and it sure looks like it's starting to break down. And then the last one we'll take a look at is the financial index. Now, I do have this that I'm counting it in the blue as my preferred count, and I'm doing that to keep it in sync with the S&P 500 and the Dow, but this has not gone to new highs, okay? So, a potential alternate count in here, I was looking at this today, is that, that we had a truncated fifth wave in here and some kind of little ending diagonal, and that what we're really doing is alternate wave one and then, back up in here doing an A, B, C. It's not totally clear, but my caution is watching this wave count in here. What are we getting given that we haven't taken out the highs like, the S&P 500 and the Dow did and the NASDAQ did. So that's my caution on here. We've got some pretty decent little pullback on the financials. Moving averages have crossed. Short-term trend appears to be to the downside. Real question is how much? And if it comes down and breaks this trend line, then I've really got to question. Again, that's just like what I just talked about. That's trend line coming up off that February low. If that breaks that on the financials, that's pretty negative. All right, so that's the picture for today. You might want to check that out. And I want to point out the post that I've got for you. So hold on a second. Okay, so if you head on over to the website, and hopefully I've got this in here. I didn't pull this up in advance. Shame on me. But this is Emerging Markets Are the Best Days Behind Them. What I'm doing is I'm taking a look at the Emerging Markets ETF, EEM, looking at it on a weekly basis, and I talk about all that. Then I look at it on a daily basis and talk about that also. So that's a post you might want to check out. I think you'll find it very interesting. And while you're there, check out, this is actually the menu for the Insiders membership. Check out the Insider membership and, subscribe. I think you'll find it very, very helpful, very beneficial, and would love to have you become a member. All right, everyone, have a great weekend. We'll talk to you on the next video.